Hello my friends, it's Mujiba here. In this video I'm going to create the UK Super Dividend REITs using 10 REITs from the UK market. These are not going to be really high paying REITs but more stable REITs to bring in a consistent dividend payment, and these dividends are going to be reinvested back into the pie that I'm going to create with these 10 REITs. I'm going to use a DRIP program, which is a dividend reinvestment program. So the dividends are going to be reinvested back into the pie. So let's get started. Let me go through the 10 REITs that I'm going to be using from the UK market to create this pie. The first one I'm going to be using is London Metric Property. So if we look at the dividend yield, it's 5.89%, and the market cap is 3.85 billion. And if we look at the income from 2020, 109.50 million, 2021, 115.70 million, 2022, 124.80 million, and 2023, 161.30 million. So it's been going up consistently. And if we look at the balance sheet, which total equity of 1.74 billion for 2020, for 2021 2.57 billion, for 2022 2 billion, and for 2023 3.97 billion. So this looks all good. And if we look at the cash flow, if we look at the operating cash flow and the investing cash flow, they look all good. Okay, the next one I'm going to be investing in the pie is BLND, British Land. And if we look at the dividend payout, which is 6.20%, and this has a market cap of 3.68 billion. And if we look at the operating profit for 2020 is 266 million, for 2021 is 239 million, and for 2022 is 333 million, and for 2023 is 344 million, which looks good to me. If we look at the balance sheet, it's in the positive, so it's looking all good. You can go through these REITs and do your own analysis. This is the analysis that I've carried out by myself. So I've been looking at the income statement, balance sheet, and the cash flow. And the third one is going to be, third REIT is going to be BYG, Big Yellow Group. They're a self storage facility. And they pay out a dividend yield of 4.40%, and they have a market cap of 2.01 billion. And if we look at the operating profit, it's in the positive, and the balance sheet is looking good. Cash flow is looking good as well. And the next REIT that I'm going to include in the pie is SafeStore, and they pay a dividend of 4.26%, and they have market cap of 1.55 billion. And if we look at the financials and the income statement, looks good, it's in the positive. Balance sheet looks good as well, and cash flows good as well. Nothing to worry about there. And the next REIT that I'm going to include in the pie is SRE, Cyrus Real Estate, and they have a dividend payout of 5.13% and a market cap of 1.31 billion. And if we look at their financials, the income statement, operating profit, it looks good. We'll go through the years. And if we look at the balance sheet, it's in the positive, looks good. Cash flow looks okay as well. I'm not going for the highest dividend yield REITs. I'm going for the ones that are more stable, which are paying a good dividend. It doesn't have to be really high, because I'm going to be reinvesting back into the pie. And the sixth one is AGR, Asura. You can do your own analysis on the companies and go into depth. I'm just going through the financials on Trading 212. I've done research on these before. I'm just going through some of the research that I've done on this video, just to show you. Just give you a brief overview on how I've selected, how and why I've selected these REITs for the pie. So this one has a dividend yield of 6.20% and a market cap of 1.31 billion. And if we look at the operating profit, which is looking good, and the balance sheet is in the positive, cash flow is looking okay as well. Okay, the seventh one I'm going to include is SHED Urban Logistics REIT. And this one pays a dividend of 6.90%, and they have a market cap of 517.68 million. And if we look at the income statement, (2020) 18.51 million, 2021 26.30 million, and 2022 47.71 million, 2023 41.51 million, which is in the positive. And if we look at the balance sheet, okay, it's in the positive, it's looking good. Cash flow is looking okay as well. And the next REIT that I'm going to include is CRT symbol, which is the Care REIT. And they offer a dividend yield of 7.86%, and they have a market cap of 361.74 million. And if we look at the income statement, which is looking good, balance sheet is good as well, the positive. Cash flow is good as well. Okay, the next REIT that I'm going to include is THRL symbol, Target Healthcare REIT. And they offer a dividend payout of 6.64% and a market cap of 537.75 million. And if we look at the financials, (2020) 38.85 million operating profit, 2021 50.16 million, 2022 57.01 million, and if we look at 2023 58 million. So this is looking all good. And if we look at the balance sheet, it is in the positive, so it's looking good, and cash flow is looking okay as well. And the next REIT that I'm going to include, the final one, is okay, I haven't written down the symbol, so let me just do a search for the whole link. Custodian Property Income REIT. This is the one, and the symbol is CREI. All of these are UK based REITs on the London Stock Exchange. So if we look at the financials for this one, let's look at the key stats. They pay out a dividend yield of 7.67% and have a market cap of 347.83 million. And let's look at the financials now. So 2020 operating profit was 28.52 million, 2021 30.08 million, 2022 31.05 million, 2023 6.55 million. So operating profit has dropped a bit, but they're still in profit. So if we look at the balance sheet, So if we look at 2020, total equity of 409.87 million, 2021 527.64 million, and 2022 437.57 million, and 2023 411.82 million. So this is looking all healthy. And if we look at cash flow, which is looking okay as well. So I'm going to go with these 10 REITs and create a pie which I can invest in, and I'm going to drip the dividends, dividend reinvestment program. So all the dividends that come out are going to be pumped back into the pie to buy more stock in these REITs and build up the pie, build up the actual investment capital in the pie, which will continue paying out more dividends to create a snowball effect. So let's get started with this. So let's create this pie. Okay, new pie, and build a custom pie, add instruments. Okay, let's put the first one in, LMP, non-metric property. And the next one, BLND, British Land. And the next one, BYG, Big Yellow Group. And the next one is SAFE, Safe Store. And the next one is SRE, Cyrus Real Estate. Okay. Okay, let's see what's up there. I need to add to the pie. Okay. Okay, sorry, I've done that. AGR, Asura. Okay, that's added to the pie as well. And then SHED, Urban Logistics REIT. Okay, that one's done. And then CRT, Care REIT. Okay, and the next one is THRL, Target Healthcare REIT. Okay, and the next one is, I should have wrote down the symbol. Let's do a search. UST, Custodian Property Income REIT. That's the one. Okay, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'll put all of them in there now. Create the pie. Okay. So they're all equally distributed, 10%, 10%, 10%. Okay. And then if I go on, oops. Okay, next, Auto invest, set and invest. No, I'm going to do it manually. Next. Create a name for it. Okay, what am I going to call this? I'm going to call this UK Super Dividend REITS. UK Super Dividend REITS. Create pie. Okay, self-balancing. Okay, let me put £100 in there to get started. $68, $70, $80. Okay, 100. So it's going to be about around £10 in each of the REITs. Next. Confirm. Okay, it's going to be in the UK market is not currently open at the moment, so when the market opens, it's going to be invested in there. Okay, London Stock Exchange. Okay, let's go for okay in there. Okay, that's done. And if we look at UK Super Dividend REITs, there it is. It's there. Auto invest dividends. So I've got auto reinvest on this one. So all the dividends that come out of it are going to go get reinvested back into the pie. So it's using a DRIP program, dividend reinvestment program, to build up the pie and in essence create a snowball effect to build up the capital in the pie, and then which will generate more dividend payments, and they will continue getting reinvested back into the pie to build it up. And I'm going to continue adding some extra investments into the pie to build it up faster. The good thing about REITs is they have to pay 90% of their profit to the shareholders by law. So they can't hold much of the income that they make. They have to go back to their shareholders. So this is why REITs pay quite good dividends, because by law they have to pay the dividends. 90% of it is going back to the shareholders. And what I'm doing is I'm building up my capital investment into each of the REITs using this pie, and I will be continually adding more funds into the pie as well. The dividends will get reinvested, and I'll also add extra money into the pie from time to time to build it up. Okay, this is my investment strategy with this UK Super Dividend REITs pie that I've created. And as with all my videos, the content is not to be taken as financial advice, because I'm not a financial advisor, not a qualified financial advisor. I'm doing my own research and my own investment to build up a stock portfolio of £100,000 on the Trading 212 platform. And if you like this video, you can follow my journey and watch as my portfolio grows, and look at the steps that I'm taking to build my portfolio and the research that I'm carrying out and the investments that I'm making. I'll continue creating more videos, and if you haven't subscribed to my channel, please do so to get updates and watch the new videos that come out. Thank you for watching the video.